Today, we're diving deep into one of the most important developments in the AI and tech investing landscape, the multi-billion-dollar deal between Microsoft, Nvidia, and Anthropic. This isn't just another corporate partnership. It's a window into the future of AI infrastructure, cloud competition, and the battle for dominance in the large language model economy. Let's break down what happened, why it matters, and how investors should think about positioning themselves. Segment 1. What exactly happened? According to the report, Microsoft and Nvidia have jointly entered a massive new partnership with Anthropic, one of the hottest AI model companies today, best known for its Claude AI models and for being a major competitor to OpenAI. Here's the core of the deal. Anthropic will buy $30 billion worth of compute from Microsoft Azure. It will also commit to 1 gigawatt of future compute capacity, which today is valued at nearly $50 billion, mostly driven by GPUs. Microsoft will invest up to $10 billion into Anthropic. Nvidia will invest $5 billion and will collaborate with Anthropic to optimize future Claude models for Nvidia GPU architectures. There's more. Anthropic already has deep partnerships with Amazon and Google, both of which are supplying specialized chips and massive cloud capacity. That means Anthropic is purposely spreading its bets across all 3 major cloud providers, a power move that reduces dependency and boosts negotiating leverage. But for investors, the real story is what this means for Microsoft and Nvidia. Let's start with Microsoft. The big picture, this deal helps Microsoft diversify away from its over-reliance on OpenAI, without losing momentum in the generative AI revolution. The article points out that Microsoft and OpenAI will remain partners, but their innovation paths are now diverging, meaning Microsoft can no longer rely on a single model provider to power all its AI ambitions. This new partnership does 3 important things for Microsoft. 1, it guarantees massive future Azure revenue. Anthropic's commitment to purchase $30 billion in cloud compute is a direct, long-term pipeline of demand for Azure. In an era where AI workloads require huge amounts of compute, this is powerful visibility for Microsoft investors. 2, it strengthens Azure's AI ecosystem. With Claude models available on Azure alongside OpenAI's models, Microsoft is signaling to enterprise customers that Azure is not the OpenAI cloud. It's a neutral, multi-model AI platform. Choice drives adoption. 3, it reduces platform risk. After the turbulence between OpenAI's board and Sam Altman, Microsoft learned a hard lesson. Don't tie your entire AI future to one partner. Investing in Anthropic hedges that risk. The article also notes that whether this investment pays off financially is unclear, because Anthropic's valuation, now $350 billion, is extremely high. But the strategic upside outweighs the uncertainty. Microsoft is buying stability, optionality, and guaranteed cloud demand. Now let's talk about the biggest winner of the AI infrastructure race, Nvidia. Anthropic already uses a blend of GPUs and custom ASICs. But with this deal, Nvidia secures 1, a long-term customer for GPUs. Azure is heavily GPU dependent, so if Anthropic is buying tens of billions of dollars in Azure compute, that indirectly means more Nvidia chips will be sold. Remember, each gigawatt of AI compute today requires tens of billions of dollars in GPU hardware. 2, a role in designing future Claude models. Anthropic will collaborate with Nvidia to optimize its AI models for future GPU architectures. That means Nvidia gets a seat at the table as next-gen AI models are built. This keeps developers tightly bound to the Nvidia ecosystem. 3, strategic positioning against custom chips. Anthropic works with Amazon Trainium 2, Google TPUs, and Nvidia GPUs. Nvidia wants to ensure its chips remain central to the AI future even as hyperscalers push their own silicon. This deal strengthens Nvidia's durability as AI chip competition heats up. 4, defensive investing. The article highlights that Nvidia wants to prevent OpenAI from becoming too powerful. By backing Anthropic, Nvidia ensures a more diverse competitive landscape, which indirectly benefits Nvidia because more model companies equals more GPU demand. Nvidia has also shown it's willing to finance customers if needed. It already committed up to $100 billion for OpenAI earlier. The $5 billion investment in Anthropic follows the same playbook. This is very simple. Nvidia is using its cash to ensure that its customers can afford to buy its chips. And so far, that strategy is paying off. Segment 4. What this means for the AI industry. This deal signals a new era in AI infrastructure. AI models will not be exclusive to any one cloud. Anthropic now partners deeply with Amazon, Google, Microsoft, and indirectly with Nvidia. This multi-cloud strategy protects it from the fate OpenAI faces, dependency on one cloud. Massive compute commitments are becoming the norm. The report says 1 gigawatt of compute today is worth around $50 billion, led by GPUs. This is staggering, and it suggests future AI workloads will require far more than even today's biggest supercomputers. Cloud providers must diversify their AI model ecosystem. OpenAI may have started the race, but no cloud provider wants a single point of failure. This deal accelerates the trend towards multi-model and multi-provider AI platforms. 4. The AI race is far from slowing down. If anything, this deal signals that hyperscalers and chipmakers expect demand to keep exploding. Segment 5. So, should investors buy Microsoft or Nvidia? The article is clear. This partnership isn't a game changer by itself. Instead, it's incremental, a continuation of the AI arms race. But here's the takeaway. Microsoft gains long-term Azure revenue, reduces dependence on OpenAI, and strengthens its enterprise AI platform. For long-term AI infrastructure exposure, Microsoft remains one of the safest and most well-diversified plays. Nvidia secures huge future GPU demand, embeds itself deeper into model development, and continues its dominance as the default AI hardware provider. Nvidia clearly remains the central toll collector of the AI era. The report concludes that as long as the AI race continues, this is bullish for both companies, especially Nvidia. Segment 6. Final thoughts. This deal tells us several things about where AI is headed. AI dependency is shifting towards infrastructure, not just models. Compute is becoming a strategic resource, like oil in the 20th century. Nvidia remains at the center of AI's picks and shovels economy. Microsoft is building an AI-agnostic, multi-model cloud platform to stay competitive. Anthropic is positioning itself as the balancing force in a cloud ecosystem dominated by giants. For investors, the message is clear. AI infrastructure, chips, cloud capacity, and model diversity will define the next decade of tech growth. And this three-way deal is the latest sign that the world's biggest tech companies are preparing for a massive new wave of AI investment.